layer on the fact that, I just wouldn't be afraid to say no. Back yourself. You know, you've done something for a reason. Completely back yourself and go and have it.
Hello and welcome to another episode of Founded and Grounded. I'm Dr. Becky Sage, and as always, I'm here with Ollie Collard. Ollie, today's episode is a little bit different because we have two special guests, and there's been a bit of a change of plan as well. So do you want to let the listeners know what's going on today?
We are going to be featuring this week our wonderful sponsors, Hexa Finance. I sat down with Ben and Stu, who are co-founders of Hexa, and this episode is quite special for a number of reasons actually. Firstly, that Stu, one of the co-founders, is a family friend. So my mum's best friend, they went to school together, and I basically grew up with Joe's two daughters, Ellie and Rachel, and Stu is partner to Ellie. And yeah, it's really good to feature family friends on the podcast and dive into their business as well. And secondly, it's important for a second reason, because Hexa are actually sponsoring the entire season 5 of Founded and Grounded. So we really want to give them a massive shout out, A, for believing in our vision, but also supporting our mission in really bringing inspiration and reality to early stage founders. So a massive thank you to Hexa. And for those that don't know, Hexa essentially support early stage and growing businesses to access finance in order to grow their own businesses. So I'm sure it's going to be of utmost importance to our listeners as well.
Absolutely. I think I love that the starting point for this was that you were friends with the team, because I think it's a big theme that comes through this episode. This idea of is business personal, and how do our personal relationships play into how our business opportunities come about. So I'm really excited to dive into that a little bit further now. And today's story starts with two ex-colleagues, friends, starting a business in lockdown. Shall we see how it turned out?
Ben, Stu, good afternoon. How are you both keeping?
Very good, thank
good
you,
afternoon,
buddy.
Ollie. How you doing?
Yeah, very well, thank you. I'm really buzzing to have you guys on the podcast as guests, but also on board as co-sponsors of Founded and Grounded as well. So really appreciate your support with the podcast and belief in our vision as well. So
likewise, we're super excited to get involved and support you.
Amazing. Well, thank you for that, and we'll come on to that a bit later in the show. First of all, I wanted to sort of rewind back in time. Hexa was started during the height of the pandemic, so I want you guys to take us back to that period. What were your individual situations, and why did you decide it was the right time to launch a business during this period of uncertainty?
So for me personally, I've got 4 daughters. We can talk about the Hexa cubes later, but I've got 4 daughters in a family to provide for. I was working for a big finance company, and I had the best job I probably could at my level until the director obviously retired, and then I took over from his role. So that's kind of where I was at. I was like, right, I can't get any better than this. And the reality was it wasn't enough. It was enough, but it wasn't enough for me personally. I wanted to provide for my family, give them a better life. My parents gave me a very good life, and to beat that is very hard. So I thought, you know what? I'm going to go for this, and I've always wanted to do it, and I have done it before. And but I knew it wouldn't work with just me on my own. I had a vision of my world and what I wanted Hexa to look like, but I knew that I needed somebody to come alongside with me.
Yeah, that leads on quite nicely. And Stu and I had worked together for a number of years before, so we'd worked at GE Capital together in Bristol. We built a good team there, and we were made redundant because the GE Capital pulled out of the finance market. So that was back in 2016. We both spoke at length then about whether we'd set up our own business together. We actually thought about doing it then, but with young kids it probably wasn't the right time, and we had a great opportunity then to go on to work for another lender. And we were there for 3 years working for an Australian business, so that was great fun. And then the market does change. Lenders' appetite changes. and an opportunity came up. I had a sort of 6 months left of my job working for Macquarie Bank. Stu was obviously working in Bristol as well for another lender, like you mentioned just now, and we spoke about, after that 6 months, do I go and get another corporate job or another job working for a lender, or do we actually do what we wanted to do, back in 2016? So I think the stars aligned. We've always had a great working relationship, and that period of Stu thinking, what I could do if I set up my own business, me then obviously leaving a business, it was perfect. So we had a good period of time where we started to put the plans together for Hexa. And yeah, it's been great so far.
Certainly is.
Amazing. And just going back to that period then, so you talked about 2016 kind of having these discussions and thinking about do we, don't we? And then obviously fast forward 4 years later, and you mentioned obviously your personal circumstances were different in terms of, your families were respectively a bit older, the market had changed, but
Absolutely.
Was there something else? Was there something, a mindset shift that happened in those 4 years?
No, I think it just was. It was kind of like on speed, wasn't it? Because of COVID and because of experience and even now, customer service in general is a lot weaker than what it was pre-COVID, in my personal opinion. And people still blame COVID or whatever it may be for that. So what happened was we had all of the normal pieces that Ben's already touched on. So you talk about funders changing appetite. You talk about people leaving and coming and going and whatever it may be. And then you add in COVID and you're just like, there is so many people in this country, or so many businesses or business owners or future business owners that need assistance that just aren't being catered for. And it was, and that was just fueled with COVID, really, wasn't it? It added it on speed, and we were just like, we want to set up a service business that just so happens to be in finance because that's all we've ever known. All we need to do is provide a very good service to all of our customers and plug a gap in which we can see in the market.
Yeah, I think we've worked at a number of different lenders together, and we've taken experience from working at those lenders. I've had a pretty loyal customer base throughout our career. We'll touch on it later, but we do a lot of work with equipment suppliers that offer finance to their customers. We've got a very broad network of technology suppliers that we work with and help them finance stuff for their customers. So if you think of a lender pulls out the market and they're reliant on them, then they have to go and find a new lender. But with Stu and I coming and setting up Hexa, we're working with a panel of lenders in that space. So it's we give that consistency to them going forward. So there's loads of things that have aligned. It's our experience at working at different places. It's our ambition to then grow a business that makes finance relatable and accessible, and those were the things that really started us out on back in 2020, right in the middle of the pandemic.
I think it's fair to say in 2016 as well, the experience, we thought we were ready, didn't we? We genuinely did. And we met investors and we had investment opportunities and all sorts to set up Hexa back then, with some very, very well-known great people, didn't we, in the industry?
Yeah.
But I'm not sure it would have quite worked then, if I'm being honest with you, because those 4 years we went to Macquarie, which is a big investment bank, and it was really fun and exciting. But what they taught us was just new traits that we didn't have, and we didn't have working for German funders or French or American, which we previously did. And I think the Aussie sparkle on the top was the culture.
Culture was good. You're learning about different finance products, different ways of approaching it.
Absolutely.
And then also, you're learning the skills about growing a division within a lender. It's like having a mini business within a business, isn't it? And if we also had the pressures of young children and back in 2016 and. When you used to earning a certain amount of money, you covering your overheads, that's great. To take a leap of faith then with your children is obviously a challenging thing that every entrepreneur that listens to this will attest to. And it is just timing. And I think it's been a lot easier for me doing it with Stu. Because we've had
each other.
We've had each other to bounce ideas off. We've made that decision together, but often people do it alone, and it is difficult. So, The stars do have to align, and some people are entrepreneurial in nature. Some people are learned entrepreneurs where they, a moment in time happens or a situation happens, and then they go out on their own and do something and then create a fantastic business. So I think everything's different. But for us, it aligned in, during COVID 2020. We both had a passion for, like Stu said, the service delivery and, making that funding landscape more secure for our customers, and then making the products relatable. And then it was just a case of having the confidence to go and do it. So, yeah, it's been interesting.
I think timing is probably one of the most underrepresented factors in determining a business success, actually. I think a lot can be put towards a timing and starting of a business and aligning it with the market. So it sounds like, as you were saying, everything was perfectly aligned, and actually during a global pandemic it was actually probably the best time for you guys to start a business based on where you were.
Weirdly, yeah, and it was an awful time for a lot of businesses, but actually that's why we set up our business, because it was awful for these people and these business owners and entrepreneurs, and could we have helped more? Absolutely we could have at the start, but we didn't have the reach then.
No.
Whereas now we do, fortunately. But we look back at, but that's exactly why we set up the business.
It's funny, just on the timing piece. So Stu was, we had this idea of what we wanted to do. Stu was, finishing his employment. I was thinking, I got 6 months left. How do we go about doing it? So it's hard to get it all right. And then it's long evenings, long weekends, thinking about, how you do things. Whilst obviously carrying on doing what you're doing day to day. But like Stu said, if you look at, so COVID had all sorts of challenges, didn't it? It's, with us, it was, how do we base ourselves close to each other? Stu's Bristol, I'm South Wales, but trying to pick those gaps between lockdown to get together and do stuff, and it is, it's challenging. And then you layer on, I guess, the struggles for businesses. So they're thinking about, am I going to survive? What support am I going to get from industry or government? And then also, I'm going to need some funding to get myself through. It was confusing. It was confusing for us in our personal lives, just as confusing for us in our professional lives. So we had an opportunity to create a business with a clear vision. And Stu's vision, was that service piece around, the customers that we work with, when they work with Hexa, they know what they're getting every time. So, we invested a lot in doing that, making sure we had the right funding options for them. They might think they need funding, but actually, trying to work out what type of finance or what type of lending they need at that time was challenges that we had to learn very quickly.
And don't downplay your side of the business as well, which was different to mine. Ben's Welsh and very patriotic, and Ben's business, Ben's side of the business is quite simple. I want to support local Welsh businesses, full stop. And that's what the business is on the direct side. We deal with such a wide variety of businesses across Wales in many different industries that we've helped support. And our job as a business and business owners is to bring other parts together to ensure that we can help fund or just help their business, and that's what we've been on a big. We've been pushing really hard actually for the last couple of months, haven't we? Yeah. That's why this has taken so long to happen, because we've been setting up new businesses and new divisions and joint ventures and all sorts. To be honest with you, but it's purely so that we've got more tools available for all of our customers.
Yeah. So guys, reflecting on that period and the stars aligning and the vision coming to life, but how did you actually go from that idea to making it into a commercial business?
Yeah, I mean, I think so. I got quite an interesting story, and I'm sure Stu will add to it a bit. But it was New Year's Eve 2019-20, so can't remember if that was lockdown or not. It's a long time ago, isn't it? But
I've still got a WhatsApp.
Have you? Stu sent me some ideas for a new business. He knew that my time at Macquarie was coming to a natural end, and it really resonated. It was all the sort of stuff that we spoke about back in 2016, like we said. But it was. Yeah. Now I had a definite end date on when I was finishing employment, so it was then I took real interest into it, and then I guess from there it's the weeks and months that followed when we started putting all the plans together and coming up with the name Hexa, and I'm sure Stu or me can talk you through the meaning of Hexa a bit later. But yeah, it was that initial message from Stu really.
Yeah, I'll jump in on that as well, because it was quite funny actually, because I know I've touched on it before, but I just knew that for this business to be successful in this world, we've worked together, and we don't understand why. Nobody does, do they? But it just works, what Ben and I have got, and we can't put our finger on it, but it just works, and we know that.
Yeah.
Everybody that we've worked for knows that. Now we've got our own business. Everybody knows that, and it's great, and it works. And I just thought, because I know Ben so well, I can't just go to Ben, hey mate, you got a cracking job and career at Macquarie with 2 young kids. How would you fancy jacking your hand in, doing your 3 months notice, and setting up a finance company from scratch? Knowing Ben's personality, I know what the answer to that question is.
I'd be a bit cautious with it, you know.
Yeah, you're more cautious.
I was probably thinking about, you know, after Macquarie naturally finished, is looking at other, you know, other stable careers really.
And there's absolutely nothing wrong with that, by the way.
But it takes someone, you know, that does know you so well to, you know, to say, right, you know, what about this? And then I guess the more we spoke about it, you know, the ideas start flowing then, don't they? And you start thinking about the different things we do. So the suppliers that we support, the direct customers we support, and then, you know, you're looking at that sort of stuff. Then it's you know, then it starts getting quite exciting.
And that's exactly what we've done. We just built it out over a period. So it started with a WhatsApp message with a load of pictures, handwritten. This is a business plan. Hey, can you just do me a little favour? We've known each other for years. Can you just make this look pretty? Add the Ben Davies touch to it, and so I can go and seek investment. And that was just a tester really for Ben, and he embraced it fully.
Lucky it wasn't late on New Year's Eve, so didn't have to try and look hard at his writing. But
he fell hook, line, and sinker, bless him.
Good.
And it was great, because after a couple of days, Ben went through it, and in everything that Ben does, he takes seriously, and he went through it all, and he started asking me questions. Oh, have you thought about this, or have you thought about that, or what about this, or them, or... And then that's how we then just slowly...
By the end of the week, we'd ordered a log cabin as well for the garden.
Oh, that's a good point, yeah.
So, like, you know, it went... You know, it started to move a bit quickly from there, and it was because of lockdown, you know, we couldn't get office space. It was like, well, we're going to have to work somewhere, so, you know, let's have a log cabin in my garden to start with.
Ben always wanted a pub in his back garden. Let's just throw that out there.
Maybe it'll be
dual use.
Yeah, exactly. But I guess the good thing about that is, we had to order that before we set the business up, because there was such a delay on it, because everyone was ordering home offices.
And the accountant wouldn't let us run it through the books
either.
either.
No, it's a difficult one, isn't it?
You bought it, didn't you?
Yeah. So yeah.
Lucky it is a pub now.
Yeah, garden, summer house now, but
summer house.
But yeah, we've those weeks then just turned into regular conversations about starting putting those business plans together, looking at types of customers we wanted to service, and we had to get some investment as well in our business to give us that comfort to go to the next level, and that's a decision that we were delighted that we took, and it's been fantastic for us. So,
and actually thinking about it, wasn't it lucky that it was COVID? Because we were working from home, so we're external sales managers, leaders, operational, whatever it may be. So historically, before COVID, I'd have been out and about 5 days a week, starting early, finishing late. But actually, when you talk about stars aligning earlier, you think about that and the planning side of it. Yeah. Because we were working from home, from the funders, we could just do our 9 to 5 because we weren't out and about seeing anybody. Food for the kids, bath time, bedtime, bang, every single night, 8 o'clock on the dot.
Call,
straight on the call. Me and Ben from 8 until 11, 12 o'clock, or whatever it may be. But the reality is we wouldn't have been able to do that because we'd have felt guilty as parents as well, Would
have taken a lot, wouldn't it, to manage, but...
100%. One of your values is simplicity is key, which I absolutely love, and I think it's one of the key pillars for business success. Mm-hmm. When it comes to finance, though, there's a large proportion of founders who kind of bury their heads in the sand when it comes to finance. So for these founders in particular, can you explain in layman's terms the different forms of finance that Hexa offer?
Cool. Can we explain layman's terms?
I think on the simplicity is key first thing. So I'll just put something in there quickly. When we started, we could have got involved in every type of finance, but we didn't on day one. We focused on what we know, which was asset-based lending. And that was really key because there was lots of government funding out there, and bounce back loans and all sorts of things, and it was confusing at the time, but we stuck to our business plan, and that helped us get through the early days. So we were providing the right product that we understood to the market first time. But over time, you do get asked for different types of funding. So on the business finance side, Stu, there's a load of different products and services available. So you've got invoice financing, you've got traditional term loans, there's property lending, there's asset finance, and there's plenty more. But then you go beyond that, and you can start looking at things like there's obviously grants, there's corporate finance, which involves loads of different things like venture funding and
Seed A,
CB. So there's
debt advisory,
R&D tax credit.
Absolutely,
exactly
absolutely.
right. And I think there might be a business purpose to why they need funding, but the customer or the startup or the growing business might just know that they want finance for a purpose. It's then trying to understand what product fits with that. It's easy if you're buying a car or you're buying a piece of equipment, you typically use asset finance. But then if you're looking at another need for your business, like you're invested in staff or marketing or tech or whatever, you might need funding, but like a short-term working capital loan might not be right. So that's been something that Stu and I and the rest of the Hexa team, as we've grown, we've made a conscious effort to find the right funding partners that gives us that breadth of products.
Yeah, you're right. And we didn't have all of it, but we were very good at what we'd done. So that's what we focused on, and what we've learned from an early stage and how we've evolved as a business is because naturally you come across these opportunities, and we do want to help, rather than us go, yeah, let's try and do it, and quite frankly do a crap job, and which tarnishes the Hexa reputation. We simply have been passing them over to people that do know. But over time as a business, we've evolved, and we can now look at certain products, that plenty of which Ben just touched on there, that now we can bring experts into our business and say, this is what you're doing, and that is solely what you're doing because you're the expert in that. And we've got a proven business plan because that's what we've done and it's worked. And that's now what we're doing as a group. So Hexa Finance is an asset finance business. But we are now Hexa Group, which is a group. And there are going to be other entities within that group which specialise in corporate finance, invoice finance, cash flow finance, loans, whatever it may be. We've realised quite quickly in our journey that we just want to help every single business as much as we possibly can. And what that means is, let's say you've got a scale of 1 to 10 for argument's sake. We may only, as Hexa Finance, we probably only had five of those tools available. So there was 5 missing. What we've done and developed over the
slowly just adding things in.
Yeah, slowly adding stuff in. But over the last 6 to 12 months, we've really started to embrace that and add that, and now we've got a full suite of products.
But most importantly, when the customer comes to us, regardless of what sector they operate in, whether they're pre-startup, they're revenue generating, or they're established or growing, the experience they get from working with Hexa is the same every time.
Correct.
So they come to us with a requirement, and we go back to them, or one of our team goes back to them in the same manner every time. These are the products that we think are right for you right now. Give them a range of options, and then the customer then determines what's best for them. And different products fit better for different industries. We won't go into it on the podcast today, but there's different products that are right for different businesses at the start. A lot of startups, as they invest their own money into the business, and that's great because you can see that they really believe in their idea, and that then helps us then with lenders when they are looking for funding. But it's like the simplicity bit is when they come to Hexa, they know that they're going to get looked after, they're going to get supported, and they're going to be given options that are going to be most suited to them at that time.
I love that. And we talked about it before, but just wanted to touch upon it again because I know the word Hexa is 6 in Greek numerals. So can you tell me a bit more about what the name is behind the business?
Yeah, of course we can. So between Ben and I, we've got 6 children. So I've got 4 daughters, Mia, Izzy, Florence and Olivia. Ben's got a son and a daughter.
A son and a daughter, yeah. A son called Xander and a daughter called Callie.
Ben's wife's Greek. So we wanted to look at something with a Greek name. What was some of the names? Ithaca?
Oh,
there was all sorts. There were so many, honestly.
The 6 cubes was, it's brilliant.
It just was perfect. And we looked at it and we were like, the 6 cubes, and obviously we're developing the group now. So we've got Hexa Finance, which is pink, and then all the others going to be, we can't have any more than 6 businesses, can we?
No, we can't.
No.
Definitely six is probably enough.
6 is enough.
We're definitely not having any more children.
Crikey, we're not having any more children.
The branding, we like the fact that it's it's pretty fresh. The colours are obviously great, but no, it means a lot to Stu and I, and actually the team have really got behind it. They really like the branding, they really like what it stands for, and that just embodies. And like you said, you picked out one of the core values earlier. Simplicity is key. So we got 6 core values. It's quite good actually, because we haven't got to think of more than 6 things at any one time.
We just struggled when we went from 6 to 7 employees, and we were kind of like, oh crikey.
Yeah, so it's difficult.
Excellent. And I mean, business is personal at the end of the day, and people do buy into that personal story and why you guys started and the meaning behind it as well. Yeah. And I just wanted to ask as well, because you kind of touched upon it then about your kind of branding being a bit funky and quirky, maybe a bit different. I mean, as an outsider, the world of finance sometimes seem to be a bit old school, full of suits, often old, pale and stale.
Absolutely.
Now, you guys are sat here in hoodies doing something a bit differently. So how are you kind of differentiating your business from the market?
I think we've just added colour, to be honest, and that's the beautiful thing about the 6 cubes or hexagons, or whatever way you look at the branding. But we've got those 6 colours, and they all pop. There's different shades on each of the hexagon or cube shape. And it
wore
pops.
Suits for long enough.
Yeah, we have worn suits.
But there's a time and a place, isn't there? But day to day, it's I know I like being comfortable in work, and a lot of people do as well, and giving people the choice to come in a relaxed, dress is great. Mm-hmm. We feel like it gets the best out of our team. It's not for everybody, but we feel like it gets the best out of each other and out of the team. If you're comfortable in work, then you typically performance is good, and it's just our way of doing it.
I think it's more relatable. I don't think there is a right or wrong way. By the way, it's just my opinion. But when you think about finance, like you mentioned there, you think dark suit, white shirt, dark tie, briefcase, and you think to yourself, if you're a business owner and you're thinking, right, I've got a finance guy coming in from, I don't know, a Macquarie Bank or a BNP Paribas or whoever it may be, all of these ginormous businesses, that's what you're expecting. And you're kind of thinking, I can't quite, I might not be able to be myself in this and that. And I'd like to think that when we turn up, a lot of we do a lot in the technology space, and you don't see people in tech walking around in suits. You just don't.
No, yeah, we're meeting business owners from loads of different sectors.
Yeah.
You could be going to a restaurant and meeting someone in their kitchen, or you could be going to a car garage or an engineering business, and it's just like Stu said, it's a relatable thing, but it's also, I guess in COVID, no one wore suits because they were on Teams and Zoom all the time. So they might have had suits on, but it's
top half.
Yeah. You said it, not me, Ollie. It's just goes with Hexa brand, and it's just we're really comfortable with it.
The security threat to UK tech startups is growing. Protecting your innovation is crucial to your business success. Secure Innovation is here to help, and it only takes a few simple steps to get started. Don't leave it too late. Visit npsa.gov.uk/innovation to find out more and download the Quick Start Guide for free today. Are you looking to access finance for your business, but unsure where to go and who to trust? Introducing Hexa Finance, providing growth funding to startups and scale-ups throughout the UK. Ben and Stu started Hexa Finance with a clear mission to make finance more accessible to business owners like you. Launched in 2020, they know firsthand the growing pains you're facing. Their fast growth business is the proud winner of the Startup of the Year award and has recently been recognized for its economic contribution. So, if you need funding now, or it's on your horizon, the experienced team at Hexa Finance are here to help. To access your free consultation, simply go to hexafinance.co.uk/contact. What strikes me from listening to Ben and Stu is that here we have two founders who've really embraced the comfort that comes with showing up as themselves. They talk about kind of wearing their hoodies and being relatable, but more than that, you hear it in the way that they talk to one another, the way they're talking to you, Ollie, as well. And so there's this comfort, this familiarity in their relationship. And actually, Stu said during the interview, it just works what Ben and I have got. This is not something that is necessarily that easy to find.
No.
And so I'm really excited to kind of look a little bit further, because I think that Ben and Stu actually did a lot of good practice. Whether they realized they were doing it or not, I think they did actually, because they're quite diligent about how they make decisions. But they went through quite a lot of good practice in order to be in a position where they have formed a good co-founding team. So can you talk a little bit more about that? What is it in this relationship that kind of makes them so good at being comfortable with one another?
For me, it boils down to two simple facts, really, which are kind of essential to co-founding relationships. And that is A, trust, and B, understanding. They just implicitly trust one another. They know how each other operate. I mean, as you said, Becky, from the interview, you can just tell the energy between them and how well they kind of gel together. And also, I think another important factor is that they're on a similar life trajectory. So they're obviously growing and raising young families at the same time. I think often when co-founders are at different stages in their life and perhaps not well aligned, then it can have the potential to cause conflict. But essentially, they can empathize with one another. They know each other's priorities inside out. And I really think that really helps a relationship. And I think you can tell from the conversations, you said, Becky, it definitely flows very naturally. I mean, we went out for dinner afterwards and we were having the same conversations as we were speaking on the podcast as when we were having dinner. And often I feel sometimes people put on a different mask, but they're just being their true selves. And that obviously comes across in the podcast.
And what I love is that when you hear them talking, it's not like they're both thinking the exact same thing. It's not like they're both the same person, right? They have a different perspective. They have a different viewpoint, and they've made the space to get to know one another's perspectives and viewpoints, and like you said, deeply understand each other's priorities. And I think that part of what really came through for me was this notion that they were talking about this back in 2016, and then it wasn't until 2020 that it really started. And again, there was this inherent understanding that when Stu sent that text to Ben, that even though he was going to be reticent about it and that he's going to find it risky, that it was going to probably be the right time to make that decision. And I guess like there was probably no risk there because they knew each other well enough that if nothing came of it, then nothing came of it, and that would have been fine too.
I think the fact they were mulling over this business for 4 years has actually really helped because A, they've done it at the right time. And I think timing is such an underrated factor in determining a business success. So I think the timing is good. I think the fact that they haven't rushed into it is also very good. And also I think the fact that they know each other implicitly so well puts them at a massive advantage. And I think, you know, if it hadn't worked out, then they would have probably just gone back into their corporate well-paid jobs, and it, you know, that they would have just taken it as a learning and not as a failure. So I think, yeah, the timing has been really key to getting this business off the ground.
Yeah, and even though they already knew each other really well, they still went through the step of trying things out together. Of course, they'd worked together before, and I always think this is such an important tip for if you're going to have a co-founder. Figure out how you can work with them on an actual project before you jump into something, because everything changes once you really start working with somebody, even if you think you know them quite well. And so they'd obviously worked together. They'd been colleagues before. They've observed how one another had worked. But they still, and Stu said he started by kind of giving the deck and saying, can you make this look pretty? And so there was still this kind of starting point of, let's just kind of do a little project and see what happens there and see where it can go from there. So I do think there's this real importance of making sure you have a in-depth understanding of how you're actually going to work together as people.
I really like your idea there, Becky, of like trialing something, doing a pilot, a project, whatever it is, getting to know your co-founder. Even if you think you know them, you probably don't until you actually get into the depths of it, as you say. So I think that's a really good bit of advice. And I think also that, you know, if you're working together and you're both on a PAYE salary, then it's going to be different to when, you know, you've got to put, you know, bread on the table and actually make income and revenue from this business. So I think it's a different facet to the business. And I think, as you say, they knew each other until they actually got into the nitty gritty of it. They probably learned a lot more about each other as the startup grew.
Yeah, the stakes are so much higher, aren't they, when it's your own thing? So I want to move on to another learning I took from this. And this is the idea that simplicity is so important, especially in the early days of a startup, in growing, starting your own business. And the way that Ben and Stu talked about this was, they said a lot, focus on what you know. And it was that focus early on that got them off the ground. They said you don't want to do a crap job that then ruins the reputation before you've even really started. So I really like that they had this focus on asset-based lending. And over time, they've realized, well, actually, in order to really fulfill our mission, which is to give businesses the best support, we do need to diversify that. But they didn't do all of that straight away. And so I really think that this simplicity is key, is a mantra that we should all have as entrepreneurs. What do you think you took from that?
Well, on a similar note, Becky, I think they didn't run before they were walking. They knew what stage they were at. And like you say, reputation is everything. And if you damage it, it's very hard to repair it. So actually, they wanted to make sure they were giving the most value in those early days. And what I really love about the early days of Hexa is that they had this clarity, which often founders aren't very clear on in those early days. They ultimately knew who they were serving, what they were offering, and fundamentally what their niche was. And I often find startups in those early days often try and pivot left, right, and center to try and find that product market fit. But what these guys said is, look, no, let's play to our strengths. Let's say no to opportunities which aren't based around asset-based lending, and let's play to our strengths. And I think that's ultimately how they've grown the business. And now they're at a stage where they're bringing in experienced people, growing a range of products that they can offer to their growing customer base. And again, the time was right to grow the business at this stage rather than too early on.
And I've definitely experienced like really struggling with how to find that focus. I think it can be really difficult. And I think the issue is, as we were both talking about, it's the kind of running before you can walk, or it's the trying to serve like this whole suite of customers and give them absolutely everything they want, and perhaps target the entire market when you can actually look at a beachhead market, or you can look at that early product and do that really, really well. Because if you don't, you're not going to get off the ground. What do you think sits behind that challenge to be able to focus?
I think it comes back to the clarity that they had, and not being afraid to say no. I think, as you say, in the early days, you're potentially trying to capture a large part of the market, and the classic phrase, if you try and sell to everyone, you sell to no one, sort of rings true. So I think in the early days, in order to get focus, go very niche on your audience, I would say. And in your marketing, actually put, this is for X, Y, Z. If you are not X, Y, Z, so call it out. Say, we're not looking for X, Y, Z. And actually what you want your marketing to do is actually repel people, to make it sure that you're attracting the right people. And it's bloody scary to try and do that in those early days. And it takes balls. But I think if you're doing that, then yeah, you're going to develop something quite exciting.
That fear is huge, isn't it? But you are so much better off, like, not wasting time further down the line, further through that sales pipeline, or maybe you've even onboarded people who are not the right fit and you're trying to serve too many groups of people when you haven't got the resource to do it. It's, such an important thing. And I think that Ben and Stu, because they had a commercial background already, that's where the clarity came from. I think it was something that was almost obvious to them, is what it seemed to me listening to this. And so that clarity they had just came from years of being in a commercial environment and understanding how to attract customers and how to hold on to those customers and deliver to those customers. And yet I am so intrigued by these kind of multiple facets that both Ben and Stu have, in terms of being that kind of very comfortable, very chilled. Like you said, they don't have to wear the mask. Completely not what we think about when we think about those who are doing commercial work in the finance sector. I think that they talked about this as well. And so, yet they still have those skills. They still have that disciplined business focus that is needed in order to get the business off the ground, develop the strategy, serve their customers, and ultimately grow their team. So should we dig a bit deeper into how they're able to work so effectively together as co-founders and see how they have overcome challenges together?
Well, I think it's changed since the start. I mean, if you think it was, Stu and I on our own working in a log cabin in my garden, we were, waiting for customers to call us to ask us about finance, and we're doing a bit of everything. But then, quickly then you hopefully get to a position when you start a business that you can start bringing other people in. And then it's a case of working out skills and dynamics. But, like Stu and I have always worked very well together. We've worked in the same team at, a couple of lenders, but both got very different skills. And some of the skills that we had 5 years ago that were different, have flipped on their head. Like Stu was dreadful at admin when I worked with him in GE Capital. Now, far better than I am. And it's just different. It's different, isn't it? Things work differently. But ultimately, Stu and I, in my opinion, are responsible for growing the business, the direction.
Correct.
And then we've brought, some fantastic people, some with industry experience, some fresh apprentices, and people that are straight into industry. And it's about lining them up to do different roles within Hexa. But ultimately, Stu and I are trying to drive the business forward, along with one of the other shareholders, and then empowering the team then to sort of fill in behind and grow different aspects of the business.
And we have got a wonderful team, and all of those guys are doing such an amazing job on a day-to-day. But like Ben says, it's just to free us up to do what we're best at. It's quite funny when you talk about what people's perceptions of Ben and Stu may be. They're normally quite wrong, believe it or not.
Yeah, it does.
They expect me to be the loud, hard-head sales person, and they expect Ben to be the more nicer, calm, operational, loving man. Now, the reality is that people do often get that wrong, and in meetings, it's fairly frustrating for us sometimes, isn't it, when people do get it wrong? Yeah. But I'm very analytical, so I'm a numbers guy and I'm a graph guy, and I'm a little bit like Rayman, to be honest with you. And I am, and it drives Ben mad, and it drives everybody in the office mad, doesn't it? But I'm very stats driven, because numbers speak to me, and I just completely get that. Whereas Ben isn't at all.
Yeah, and like sometimes when you start a business, you'll have someone that's maybe got a finance background, or someone's got an operations background, or a commercial background. Stu and I come from a commercial background with a bit of operations in there, bit of marketing. So that plays into our strengths, because we're constantly thinking about, growth opportunities and where we can support businesses. But, we need expertise around us then to fill in, operationally or from a finance perspective, or
absolutely.
and we outsource quite a lot as well.
Yeah.
So we bring other local businesses or national businesses that have got specific skill sets, like it could be marketing or could be accountancy, bookkeeping, whatever, HR. So we're lucky that we're commercially focused, which is great, but we're also there's things that I like doing that Stu doesn't like doing, and vice versa, and it naturally just works. So we just pick up different things at different times, really.
Yeah, we do.
I think there seems to be a bit of a kind of telepathic relationship. I mean, Ben went out the door before and Stu was like, he's going to forget the code to the door. And Stu came out and he was like, I'm just going to wait for him there. And obviously you've got a very good understanding of one another, which is pivotal in obviously being co-founders.
Yeah.
And I imagine when there's conflict, potentially at times, that you probably get it resolved quite quickly. So can you tell me about any conflict within the business and how you've overcome that?
We're going to throw this out there, or I'm going to throw this out there. It doesn't happen often, does it?
It doesn't happen often.
Because we've got the same thing. I think because we've got the same agenda, because we are both commercially focused, we want a commercial outcome generally. Sort of covering a little bit of the previous question, so apologies. But you remember earlier when I talked about how we probably have only got 4 or 5 products and we need 10 to be able to cater for everybody. That's no different to our skill sets. Between us both, we're pretty good. I feel like we've got all 10 covered at a very minimal basis. Some of those will be very high standards, some will be very low. And for the same reason that we've brought people into our business as specialists in certain finance products, it's the same reason we bring people into our business for different skills.
Yep.
So I think that's vitally important.
I think taking a step back as well, like we, just because I view a situation in Hexa's life differently to Stu's, it doesn't mean that Stu's viewing it from a better or worse position than me. So, and it's easier said than done, especially as everyone knows that this business is flat out and there's loads of things being thrown at you, all the time. But
we had one Barney, didn't we?
Yeah, we've had
in the shed.
Yeah, we had, in the early days, but
because we know each other so well, when that happened, sorry to jump in.
Right.
When that happened, I just put my laptop away. Didn't say bye.
Got in the car and
said bye to Tallulah, Ben's wife, on the way out, just to wind him up a little bit, and then jumped in the car. And I got about 10 minutes down the road, and he rang me up with a white flag, saying, yeah.
I think,
but that's because we
important.
know each other, and likewise, I'll blow up way before Ben will blow up, and he knows that. So he'll just wait for me to get to wherever I need to be.
Disagreements and not being on the same page is it is healthy.
Of course,
and
it is.
I think the best way of describing it is challenging people.
Yep.
So like Stu will challenge me daily, and I hopefully challenge Stu daily as well. And we like it when our staff challenge us with new ideas.
Correct.
Ways of working that makes Hexa better. When customers come to us with I need funding and I need it tomorrow. It's all about challenging people. And then you get you do get the best out of people. You take people out of their comfort zone, but then just communicating. It's really important. And we're in the office all quite a lot together. We're out seeing customers together. We speak about Hexa outside of work. It is just those communication and I guess not taking yourself too seriously, having humility and just getting on with it.
And talking of things when they go wrong, can you tell us about a time when there's been a failure and what lesson you learnt from that failure?
I've got one which is probably quite it's quite recent actually, and I wouldn't say it's a failure, it's just a learning. So we work with a panel of lenders to provide finance products to our customers. Now, when we get used to working with a certain lender, typically you use them more and more. It's just, it's habit, isn't it? You get comfortable with what they can offer, you get comfortable with their service and the deliverables to your customers. So, there's times, right at the start of the business and more recently where, we have put a lot of business to a certain lender for a certain product. Now, if that business exits the market, you then start thinking, oh, actually, we now need to then, change our approach a bit. So that's an example of something I wouldn't say it's a failure, but it's in the same reason why we set up Hexa was to give that stability. Sometimes we can get a bit comfortable with a certain lender.
Absolutely.
So we've just got to we've just got to keep making sure that we're putting business to the lenders for the right reasons, not just for comfort. And that again goes with experience and time and all that sort of stuff.
And we have been caught up on that on numerous occasions with certain funders that make your life really easy, intentionally. Not intentionally, well, it is intentional. They want to write more business. Of course they do. They're a bank or a finance company. And it's... We've been through so many redundancies and we've seen businesses exit and we know the traits. We know when it's coming. And sometimes it's hanging on a little bit too much, isn't it, with some of them? Because you think, it might not happen to these ones. It might happen to these guys.
Yeah.
And inevitably it does. And it's just ensuring that when that does happen, that you've got a real sound panel of people behind you that can keep supporting your customers.
And we've talked before a bit about your corporate backgrounds.
Yeah.
I want to know about what the biggest difference is between working in a big corporate business versus running your own startup.
Well, I think...
I've got a good analogy here.
Go on.
Being from Southampton, we've got P&O ferries that go to the Isle of Wight, and they're big old ferries, and they take an hour to get across. That's a big corporate finance company, or not corporate finance. That's a big bank. That's a big finance company with corporate red tape, this and that, whatever it may be. And we're more like a couple of lads on a jet ski that can not duck and dive, but we can manoeuvre. We can move so fast compared to these. So if you can imagine this massive P&O ferry with 1,000 people on it, them turning 360 degrees takes forever.
It's difficult.
Whereas us,
it's challenging.
On a jet ski, we can turn really quickly.
But I've worked at a couple of small independent finance companies as Stu has, and we've worked for some great lenders, and it is they are different. They've got similarities, of course, but quite often, there can be a lot of layers to working for a bank. You typically get some fantastic training, development, and all that sort of good stuff.
Amazing. And I'll actually throw something out. Sorry to jump in,
That's
but
good.
GE Capital. We were at GE, and GE as an American business was absolutely awesome for both of us. I'm not sure I could have survived in the corporate world when I first entered it, because I was always told I couldn't until I ended up at GE, and they embraced me being a little different to somebody like a Ben or Andy or Pete or all of our colleagues. We were all different.
Yeah,
but where they were amazing was the training and development and the time that they gave us and that was awesome, wasn't it?
Yeah, and then you go on, when you start a business, you start thinking about what bits you want to take from the places you've worked before.
Yeah.
So I like the fact that when the smaller businesses they've got the opportunity and they're able to be nimble, so they can move where opportunities are, and they can go and see a customer at the drop of a hat, whatever that might look like. But then when you working for a lender, like the training and development is a good example. Some of the benefits you get when you're employed by a large corporate are fantastic. So we've tried to incorporate some of that into the stuff that we do with our staff. So we've got Hexa Academy, for example, which is
absolutely.
which Adrian runs at Hexa, and that's fantastic. So it's giving our staff the sort of regular on the job training, as well as stuff about the industry, different products and stuff. So I think you always take a bit from everywhere you've worked, and then you start thinking about and some of the places we've worked before, are funders of us today and very supportive of Hexa today. So it's taking little bits, but as a startup, ultimately, where it's fast paced, no 2 days are the same, and as we get past that stage, we're now 3 years in, we're starting to layer in, processes, systems, we're bringing in different staff, in different, general manager, operations manager, credit manager. So it's all those different functions, and we've learned that from working at these places, but we're just doing it our way.
Yeah, absolutely.
Love that. And business can be all-consuming at times. I'm sure there's times on your journey when you just question everything. There's so much coming at you consistently, and it's hard to keep your head above water. What's one sacrifice that you've both made, either consciously or subconsciously?
It's a good one, isn't it?
Well, I sacrificed the bar, didn't I, so we could have an office first.
I've definitely put on about 3 or 4 stones since we started at Hexa. So, I was never exactly Slim Jim anyway, but my weight does go up and down. But that's one thing. But for me personally, sorry, taking the jokes aside, I feel I'll have to say Ellie, to be fair. So Ellie's my partner. We're getting married in 2025. Can't wait for that. But I feel like she's been extremely supportive, but I do feel guilty sometimes. I've got 4 daughters. I love our family, and we spend as much time together as possible. And that's the reason why we set up Hexa ultimately, wasn't it? To have more time with our family and for them to have a better life than Ben and I as children, you know. And again, very difficult because we both had good lives. Our parents are fantastic. And that's kind of, I guess that's probably it for me. That time with Ellie, I think when I was employed, I definitely think it was a lot easier just to go, I've finished, I can fully focus on you guys and Ellie in particular. And I feel like that's over the past 3 years, there are times in that, it's not all the time, by the way, but no. There are times over that 3-year period that she hasn't got what she deserves, to be honest with you.
No, I disagree. I think you're doing it for the right reasons. Good team, and it can feel like a bit like that. I think where it's all encompassing, isn't it? Yeah. Like running a business is all encompassing. It's a damn sight easier having someone else doing it with you, and now we're getting to the point where we've got a team. It's probably the worry as well, isn't it? Like
absolutely, yeah. If you spoke to Ellie about this, she'd be like, "Oh no, he can crack on. It's actually easier when he's not here." to be honest with you, that's the God's honest truth. She would.
We are doing it for a reason, and Stu's doing it for a reason, and it's like.
But it's that guilt side, isn't it, that gets you? You know, sometimes
it's those late drives back home. You know, and after a tough day or tough week. I mean, from my side, like sacrifice, I think it's for me, it's more like a comfort thing. So like if I look back at. And Stu spoke about it earlier with like when we set up Hexa, I was naturally more suited to working in a corporate environment and that security comfort blanket. So to sort of go away from that to set up our own business was a bit of a leap of faith, and I could have done it without Stu and the support of like my family and friends. So I think sacrificing that comfort, that predictability of income right at the start was a real challenge, and now. As we've managed to get through 3 years, a lot of businesses don't. So we're very fortunate that that's happened, and now we can start thinking about bringing other people into the business that we can have a bit of a better work-life balance, which is what we promote to everybody in the team. Yeah, of course. But now we're starting to see some of it. But for the first 3 years, it was very challenging. So that's a sacrifice.
It's literally been the last 6 months we've really you're right, and I think the last 6 months, I think it's finally clicked for us. For all of us, and like Ben said, we are very fortunate to get to where we got to. Not every business does, but we're at the stage now where we are enjoying it a lot more, and we are spending a lot more time with family.
It's getting back to what it was like the day we started, and the calls, those evening calls. We're starting to get that enjoyment back. The last 2-3 years has been full on.
Yeah, it has.
I mean, everything in business and in life generally seems to go in kind of peaks and troughs and cycles, doesn't it?
Yeah, it does.
Guys, can you run me through the different forms of finance and generally the different stages that you might access those?
Yeah, of course.
Yeah, it's probably easy just to sort of talk about like a startup business and some of the finance that they might choose to take out or look to obtain as they grow. So invariably entrepreneurs and startups would put some money into their business themselves potentially through savings or family and friends perhaps, or maybe there's grants that are associated to their industry. Fantastic. As they then grow, they might look at, do I need equipment for my business? And then they might use asset finance, which is a product that we offer at Hexa. As they grow, they might look at things like, invoice financing, especially if customers are paying them, on 30, 60, 90-day terms, for example. They might want to grow and take out a working capital term loan over 12 months, 3 years, 5 years, that sort of stuff, and that might be linked to a specific project, or if they're seasonal or whatever. And those are typically the sort of commercial finance products that we see regularly. But there's also
I'll jump in as you sort of evolve, and I think touching on some of the stuff earlier about sort of like the product suite and where Hexa Finance fits traditionally, everything that Ben's just mentioned there is what we do. We've started up a Hexa corporate finance business recently. We've got a joint venture with some guys up in Preston, and ultimately what we're trying to do is have more tools. So Ben's talked about So if you're looking at a life cycle, of a business, you think of Ben's gone through the startup and how they've grown to, let's say they're at year 5. They then may be looking at exits. They may be looking at venture sort of fundraising or debt advisory, whatever it may be, seed funding. And that's where the corporate finance piece falls in. So ultimately, we can go from a brand new start plumber that was self-employed. He wants to buy a van because he's going to set up a limited company. Or he's still self-employed and he wants to buy a van. We can do that for you. We can do a brand spanking new start business that's looking for a cash flow loan, or they're a restaurant that needs to obviously buy a bloody kitchen because you need to cook something, right? We can then do asset finance. You could be a shop that's taking card payments that we can now, there's facilities where you can actually take a loan, cash flow loan, against how much money is coming in through the card payments, etc. You might get to the stage where you want to buy a commercial property and you can do commercial mortgages. But ultimately, they're the products that we do. Layer in the corporate finance piece. From start to finish, we can deal with absolutely everything. And all of the guys in the business are happy to talk to any customer at any stage and where you are in your path.
Money is, of course, one of the major challenges that startups face. So if you're listening and you're feeling challenged by finance, or you really just want to explore some of your options, do make sure that you go and check out Hexa Finance or check out those options that they just talked about. So something that came up was this notion of the difference between corporate and startup life. And what we often hear, and what Ben and Stu said, was it's great. You can be really nimble in a startup. You can turn really quickly. You can go see a customer at the drop of a hat. It's really fast paced. And they've spent the last 3 years kind of being nimble. And now they're layering on those processes and systems and so they've kind of learnt this through working in a corporate. They now understand kind of how do we start to operationalize this further. But a startup can only be nimble if they have resources and they have that focus that we were just talking about, but in the last section. And so whilst your decision-making processes can definitely be more nimble in a startup, your ability to maybe move quickly might not always be there if you don't have those resources. How do you think that they were able to act really nimbly even when they didn't have that much in terms of resource?
For the first 3 years, they have acted very nimbly, very quickly, that startup mentality of, break things and do things at speed, because that's what ultimately has given them that traction in the marketplace. I guess the phase that they're at now is probably slightly different. I think, when you've got sort of sub 12, 13 staff, you can kind of manage everyone quite effectively. But when you go beyond that, which we hear about a bit more in the future section of Hexa, is a different stage of the business. So I think what they've done very nicely is actually taken the best elements from corporate life. So we're talking about, the processes, the systems, the training and development, and they've embedded that into their startup as they've grown it, as they've gone along. But they've also kept the added flexibility and being able to react to the marketplace, and they've used that to their advantage in order to best serve their customer base. So I think what they've done really well is actually blended both of those worlds, which are obviously very different, and done it at the right time.
Because it is something that many people struggle with, is this mindset of being able to shift between the two. I know that I was recently speaking to somebody who works with a lot of startups and running an incubator program, and they said that they found some data on their program that said that people that came from a corporate background actually had the highest percentage failure rate in startup life. And perhaps some of that is to do with something else that Ben and Stu were talking about, which is coming from having this stability in the corporate setting. Perhaps you have got more resources. Perhaps sometimes as well, because you've only got to do a narrow part of the business, you haven't maybe developed the skills that are going to help you to do something that involves you having to see the entire business and keep that moving. So that's definitely something I think to be aware of, that it takes a lot of skill to be able to take those good things from being in a corporate setting and then adapt that into the startup life. Do you think, and having kind of had other conversations with Ben and Stu as well, why do you think they've been able to make this transition really effectively?
I think it boils down to probably three things. I think firstly that they've got this implicit understanding and trust between one another, which makes them comfortable with decision making and knowing the business is safe in each other's hands. So I think that's the first thing. Secondly, I think it's their commercial focus. So ultimately, if they're taking on staff and not bringing in extra revenue, then that's going to have a knock-on effect on the business. So I think having a focus on the bottom line keeps them successful, and I think their commercial expertise has been able to show that from day one, really. And lastly, I think it's about having a flexible mindset. They're very clear that probably their roles at corporates were quite different to what they're doing now. I think they've had to learn a lot on the job of running a business. Like Stu was talking about being awful at admin and now is actually quite good at it. So I think there's things that you learn along the journey of running a business. I mean, for me, I would say if you want to push yourself in terms of personal development and growth, starting your own business is the biggest opportunity for learning and development that you can possibly ever have and imagine. So it's going to be bloody hard work. And I think we need to make that fundamentally clear that, if it was easy, everybody would be doing it. But as I say, the opportunity and the upside definitely outweigh the downsides of running your own startup.
I love that one of the upsides isn't that you become a CEO or a director or a founder and then you don't have to do admin anymore.
Yeah.
It's the other way around in a startup. And of course, they talked some more about other things that they've sacrificed, and it's a theme that comes up a lot with startups, is sacrifice being away from home and sacrifice the predictability of income. Possibly you're more, even when you are at home, your mind is more on the business because that just never really switches off. And so perhaps your engagement with your family life, you have to work really hard to make sure that you keep that up. And so they talked about that having been a bit of a struggle over the last few years, but now as they're moving into this new phase, they really are trying to kind of create this work-life integration, as I call it. So thinking about kind of how being able to have that balance, but recognizing that work is a priority and the work itself helps to support the family life and gives some flexibility and freedom that you might not have in a corporate setting, but also has these downsides. So you said kind of, if it's easy, everyone would be doing it. And of course, many people don't take these risks. And how do you think that you can move towards creating this balance when you are a startup founder? Because you need to make it sustainable.
And I think it is really hard, particularly if you've come from quite a structured corporate life. Because running your own startup, you have to be a lot more flexible. One day probably isn't going to be the same. You're going to be doing so many different things, wearing so many different hats. So you've got to be comfortable with the uncomfortable first and foremost. And I think as well, like you were saying about, they've got this weight of responsibility of both having young children, and they've got to make sure that they're paying the mortgage, paying the bills, and all of the important stuff that comes with having the responsibility of being a parent. But I think they've used that as their superpower and their driver. Like you heard Ben and Stu both refer to why they're doing what they do, and it's to give their children a better life. And I think if you're flipping the mindset of, yes, you've got to, provide, but actually, why are we doing this? Why are we having these crazy days of, testing ourselves and being driven to the extremes? Ultimately, it's for a bigger reason than themselves.
And they've even built that into their name so that they can be reminded every day then when they're at work exactly why they're doing it. So they also talked a little bit about their team and how they've learned from their own experiences, how that's helping them with their team. But I'd love to hear a bit more now about the Hexa Finance team and how they're bringing new people on board.
So we've got 13 members of staff now. Don't know whether that's lucky or unlucky. We're going to say it's lucky because we've got some great people in the team. We've got a mixture of people in the business that have got finance experience, and we've got some people that are starting their careers for the first time. We've partnered up with a local college, Cardiff and the Vale College in South Wales, to do an apprenticeship, and we've got 2 great apprentices that are in the business now, doing business administration. But the team is very varied. We've got, like I said, people with loads of experience that have worked for corporates and things like that. So I don't think we're necessarily going to bring anyone in the short term, Stu.
We said that last year.
We did say that last year.
When there was only 4 of us. Yeah.
When there was only 4, but we right at the start we had we were lucky that we brought a few people in that we've worked with previously. Yeah. So that that was fantastic because we worked with them. We understood their skills and actually really complementary, and then. We then started introducing new people to the business, and it's just about finding your feet. And we've recently moved offices as well, so we've got a wonderful office space in Langstone in Newport by the Celtic Manor, above a law firm that we work closely with, collaborate with quite a lot. So that's a great space for the team, and we have got room to fill that a bit more with maybe 5 or 6 more heads. Yeah. But it's just doing it at the right time. And Stu, being analytical, will know. Based on business volumes, based on the opportunities we're working on, when that time's right, and then just backing each other to make that decision about bringing the right people in at the right time.
Love that. And so in terms of the next 5 years, you mentioned obviously having this range of 10 products and services. What does success look like for you in the next 5 years?
Yeah, I was going to answer that part of the question actually. So for us, something that we're always banging in to all of the guys that work, not for us, they work with us, don't they? They do. All the guys that work with us, is for success for me in 5 years' time is to see absolutely everybody that's currently in the business still be there, apart from one who might have retired. And good on him if he does. No. I hope he does. I'm not sure he will though. Will he?
No.
Hopefully he does, for his sake, because I'll drive him mad in 5 years. But no, seriously, in 5 years' time, I would love success to me would be that everybody that's in our business currently still is in 5 years' time, but they've all developed their careers. So, like Ben touched on earlier, some of the guys are completely new to finance. Some of them are apprentices. Some of them have got a wealth of experience in certain parts that they might want to navigate and push on into other areas.
In order for those opportunities, isn't it?
In order for us to do that, we Ben and I, as owners of the business, and Adrian, have to continue to grow it, because if it stays flat, none of these guys, and they're amazing, every single one of them is amazing, and they won't be able to develop unless we grow our business. So it's down to us. So, and that's what I love about actually having a business is that it's not just us, and it's not just the 6 cubes and our wives. It's everybody, and we want everybody to succeed, don't we?
Yeah, I mean,
but it's down to us, and I love that.
Yeah, exactly right. Couldn't have said it better. It's creating that platform for people to develop their careers. Yeah. Creating opportunities by helping more customers, like we said right at the start of the podcast, adding new products, adding new funding relationships, expanding our customer base. If we keep doing that, and we provide the right training to the team in the office, they get the opportunity to progress their careers. And who knows where Hexa's gonna go next. But what I would say is, what we love about our job is working with other like-minded businesses, understanding where finance can impact them.
Yes.
In a positive way. So that is the most important thing, is making it accessible, relatable, understanding what finance will do for the business, bringing those opportunities into Hexa, and then just seeing the team grow. So correct. I don't think it's very difficult to put certain milestones. I think when we've always been, let's just keep going, let's just keep working hard, let's just keep trying to do the right things, have the right relationships, the right partners, You know, and that's, you know, that's worked well so far, and we'll continue with that. You know.
There's no 5-year, let's get out of here.
Yep.
We need EBITDA to be this and that and all of that malarkey. But don't get me wrong, that's right as well, by the way. But that's just not mine and Ben's approach. Our approach in this is that we just want to grow and develop a team of people and a business, and really just see where it ends up. We are doing the right things. We have management accountants that go through and do. We started due diligence already, and we're only they've been in the business for 6 months.
Exactly.
So in 5 years' time, if somebody does come knocking, we've got 5 years' worth of due diligence already done. And so we are always planning for the future, but the ultimate outcome for Ben and I isn't a sell. It's just to continue to develop our people.
We're moving on now to one of the key parts of the podcast. So I always put our featured entrepreneurs on the spot.
Okay.
I want you to distill down just one piece of advice that you'd pass on to an early stage founder or somebody thinking of starting a business. So who wants to go first?
Somebody go first?
Go on, you go first. You've probably pre-planned for a question like that, haven't you?
Ollie didn't tell me, so no. Like, really, really simple. Don't just think that you can do it all or know it all. I think that's really important. So, you know, like whatever your business is or whatever market you're in, it is like running a business is challenging. There's no getting away from it. You might be commercial, you might have a finance background, like I said earlier. So, I think, you know, having a bit of humility, understanding where your strengths are. You know, I'm lucky I got, you know, a business partner. We've got some good people around us, but knowing your limitations, knowing, you know, what you like doing, where you add value to your business, and then having other people around you that can fill in the gaps or outsource into other businesses that can support you. So I'd say that's, you know, there's a lot of advice and guidance that you can get from, you know, from partners or, you know, your network. So just don't be afraid to ask, and don't try and do it yourself.
Love that. And Stu?
I'm going to go back to simplicity is key. One of our, obviously, one of the mantras of Hexa. And for me personally, I would just say don't be afraid to say no. Because when you're a new start business or a founder, it's very hard to say no sometimes, even for something that's loss making. And that really just be my advice. Ben's nailed it, by the way. But layer on the fact that, I just wouldn't be afraid to say no. Back yourself. You know, you've done something for a reason. Completely back yourself and go and have it.
Love that. Where can people find out a bit more about Hexa online and take up their free consultation?
Yeah, so we've so our website www.hexafinance.co.uk. It's got a wealth of information about the products and services that we offer, but we are an approachable bunch. You know, we make finance relatable, so we'd always welcome businesses, you know, giving us a call, chatting to any one of our team about their requirements. You know, we're on usual socials as well. But
just about to start TikTok, aren't we?
I think we are. Yeah, one of the apprentices
advised us
it's going to get us on TikTok. Yeah, look, we'll come and meet customers. We'll get on the phone with customers. We're approachable, so It's not just submit a form and someone will get back to you. It's we're a people business. We love communicating and interacting with businesses and getting to know them.
Absolutely. There's a telephone number on the website. Call us 102 about help. If they can't help, they'll take the relevant notes, and one of the senior guys or the specialists in what they were talking about will be straight on the phone within 24 hours.
Ben, Stu, it's been an absolute pleasure having you guys on the podcast. Thank you so much for your time.
Yeah, likewise, Ollie. Delighted to join, and can't wait to support the rest of the Series 5.
Yeah, absolutely. Thank you very much, buddy. Appreciate that.
Cheers, guys.
Bye now.
Back yourself and go and have it. What a great motivator. I love that. And you really feel that is something that is fully integrated in Ben and Stu. They're like, we are just doing this now and we're enjoying it along the way. Now, talking about kind of enjoying it along the way, one of the aspects of that Ben and Stu just talked about was working with their team, and that being a major motivator with them. In fact, when they talked about their success criteria being that all the team would still be with them in 5 years' time, that came before anything else they said in answer to that question. And so I think that for many people, teams can be exciting and motivator. I do think that that's very common, what they were talking about in terms of having that team to really back and work for and grow and develop. But it can also be very draining if you don't get things right with your team. And so Ben and Stu demonstrated a lot of lessons that I think that we can learn. They talked about giving opportunities for training and work. They talked about the fact that now the team is there, it gives them the impetus to go out and get more work because it's down to them to provide that work for the team. And they talked about kind of giving opportunities for other people to progress their careers, and that was a major motivating factor as well. This idea that their team are not able to evolve in this business unless the business grows. And that was something I definitely experienced with my team when we were starting, and then as we were growing, being able to expand in such a way that we could move people across if maybe they weren't in perfect fitting roles, but they were still, really good team players and they just needed to have a different role. But also that idea of like being able to promote people, being able to kind of give them a higher salary, and all those things that can be intrinsic and extrinsic motivators and are actually really important to keep their team motivated and keep them engaged. But it's not always going to work out that way as well. So how do you think that Ben and Stu have navigated this team expansion?
I think they've handled it really well. I think they've obviously grown from the two of them into a team of 4 and now rapidly expanded to 13. So they're obviously doing something right with their recruitment. But I think the answer lies in how they see the team as a fundamental aspect of the business. As you said, that his answer to the next 5 years was about whether the team are growing into their roles and whether they're aligning with the business growth. And I think the development of people really comes across in this business. I think that their new office, they were telling me all about it. It's near Celtic Manor, and they basically got a large space above a solicitor's firm, and they love going into work every day. There's a buzz about it, and I think they get lots of energy by going in. And Stu actually said they work with us rather than they work for us, and they fundamentally see themselves a part of this growing team. And I think that's at the heart of what they're doing. So I think that's how they've got it right. It's not a them and us, it's a whole integration of people and how they can develop people. And I think you just have to look at them recruiting younger people as well as the experts. So the growth has enabled them to bring in both experienced people but also younger people into the business. And I think diversity is key when you're building out a team. So they're obviously offering this new corporate finance arm. They brought in somebody very experienced to run that part of the business, but they've also brought in young talent. So they looked at recruiting an apprentice, and they were so impressed they actually went back to their local college and they said, can we hire 2 of them rather than 1? And I think you get that raw energy, that passion, that new ideas, them talking about wanting to open a TikTok account for Hexa. And I think that has just enabled them to really put the team and people at the forefront of their business. And I think that is one of the reasons why they've experienced a lot of success today, but also will continue to grow the team and the business over the next 5 years.
Yeah, it feels very sustainable now, doesn't it? That growth, from listening to them anyway, because it's not all in their hands, because they have diversified and they're very good at integrating as part of that wider team. And I think one of the things that came across really strongly for me is that they have, and I think they described this as well, so they had this humility, and that's so important, being able to know yourself, know your weaknesses, being able to be humble enough to actually engage with people and be empathetic for other people on your team and to understand their drivers and their motivators, and knowing you can't do it all yourself. And so that quality of humility is something that is really important to develop as an entrepreneur.
Yeah, and I think it also goes hand in hand with honesty. So I think they're quite honest about their approach to business. So there'll be times as when you're a founder where you don't have all the answers, and the best way of trying to find a solution is actually being honest with your staff and saying, look, this is the situation, this is a challenge. We don't know the best direction potentially to go in, but actually listening to your staff, getting feedback from them, and actually having the understanding and the awareness that you're not going to get it right every time is such an important factor in running a business. And also it leads back nicely to the point about just backing yourself as well. And I think there's a great quote by Henry Ford that says, whether you think you can or you think you can't, you're right. And I think that self-belief is absolutely critical in being a founder.
Absolutely. Perhaps that's one of the main things we can take away from today, is then knowing their weaknesses, knowing themselves, but ultimately having that underpinning self-belief. So if you need anything to do with finance and your business, make sure you go and check out Hexa Finance. And Ben and Stu do have a question for you. So let's go over and listen to what their question is.
Given Hexa a finance business, and a number of your listeners are going to be, thinking about finance as they grow, I thought I'd ask a very simple question: is where would you, the listeners, typically go when looking for finance for your business? And I think a couple of the options would be maybe your existing banking relationships or a trusted advisor like an accountant. Maybe look online, do some searching related to the finance you think you'd look for, or maybe even ask your network. And I guess the other end of the spectrum is you just don't know where to turn. So in that situation, then there's obviously a wealth of businesses across the UK like Hexa that can support. But yeah, really interested to gauge what people do when they think they need funding for their business.
So don't forget to go and engage on our socials. Let us know what you think the answer is to that question. And talking about socials, shall we go back and check what you were all saying about Dominic's question? Ollie, tell us about Dominic's question. What were the results?
So Dominic posed the question, what is the most popular experience that the public have booked in 2023? So he gave us 6 answers for his question, but on socials we're actually only allowed 4 options. So we did have to cut it down slightly. So the 4 options were cave art virtual reality, drone light shows, foraging, or unicorn trails. So interestingly, the public actually selected the right answer. So drone light shows was actually the most booked experience for Yup in 2023, and 71% of you said on socials that was the answer, and you were correct, followed by 14% for cave art virtual reality and 14% for unicorn trails.
Wow. I'm actually surprised. I mean, I did vote for the drone light show as well. But I wonder if all of us just voted because we were like, yeah, that sounds really cool. I might go and book that. But that does surprise me that was the most booked. I actually thought yoga, which obviously didn't make it into the final 4, was going to be the most booked experience. But just goes to show, I mean, it's exciting, isn't it, to see that we can do these different and innovative things. And those drone light shows will be using technology and skills and resources and people who are in the Bristol area who are developing those shows, and now they're getting a big audience for it too. So great work by Dominic and the team at Yup.
Yeah, and I think maybe we'll have to do the Founded and Grounded Christmas party as a drone light show, Becky, I reckon.
Yeah, that's a good idea. Let's do it. And I mean, lights and Christmas. Come on.
There we go.
Yeah, it's exactly what we need. Thank you for listening. If you like what you've heard, please leave us a review on Apple Podcasts. And don't forget, there's a big selection of previous episodes. Search Founded and Grounded on your favourite podcast player.